Hi, welcome to the Joy Business Report, everyone. Coming up this morning, International Monetary Fund revises again board meeting date on Ghana's program review to the first week of December over concerns about China's position on debt restructuring. Also, Face Solutions expect Ghana's fiscal deficit to widen next year due to election spending as the economic challenges are far from over. Also, CD may record single-digit depreciation against dollar in 2024. We'll hear from a projection by the Economist Intelligence Unit. Stay with us for details. My name is Daryl Kwao. Thanks for being with us. Hello to our friends listening from Koforidi on KTU Radio. First up, the International Monetary Fund has once again revised the date for the board meeting on the review of Ghana's program and the disbursement of the second tranche of bailout package to the first week of December. This is what Joy Business has picked up from persons with knowledge of Ghana's program with the fund. Here's George Yaffe.
The move is more of a precautionary measure to deal with fresh concerns coming from China over the December 22 cut-off date for restructuring its debt. China rather wants March 2020 as a date that all funds that it has given to Ghana to be restructured. The IMF board's new date is to ensure that by that time, all these concerns have been addressed. Sources say the action has nothing to do with Ghana not meeting the targets set under the program for fresh disbursement. The fund had initially set November 29 as a new date for the board to meet on Ghana from the Wednesday date of November 22, 2023. However, this new date is what Joy Business has picked up from persons working on the program. Sources say the fund is not looking at the full agreement to be reached between Ghana and the official creditor committee co-chaired by France and China, but rather just a letter of comfort that they have agreed on the terms to begin discussions to restructure Ghana's debts. Government, on the other hand, is optimistic that this letter of comfort may come way before the date that the board has set to review Ghana's program for fresh disbursements.
George, I feel with that report. Meanwhile, economist Professor Peter Korte says the move by the IMF is in the right direction. He however points out that the good news is Ghana has met all the requirements needed to get the disbursement.
The government has met all the requirements. There's supposed to be a deficit gap of 0.5% of GDP, which has been met. And we also supposed to have read the budget, that has been done as well. So all that is required is the comfort letter from the creditors.
You had Professor Peter Korte, an economist there. Now, economist Dr. Edu Usisako has expressed optimism Ghana's economy will once again become preferable for both local and international investors to do business. According to him, the recent economic recovery over the period sends a strong signal to investors on the need to consider Ghana as an ideal destination for doing business. He tells Joy Business Ghana will soon have access to the capital market to borrow at a low rate. He was reacting to Face Solutions' prediction that Ghana's economy will see a gradual path to recovery in 2024.
Positive signals, positive signs for Ghana is a good news for the Ghanaian economy. Hopefully, we'll be able to return to the market and not just borrow at a higher cost, but borrow at a lower cost. Because our yield curve, wasn't positive for some time now. I'm sure with this announcement and with these all signals, we'll have a positive yield curve. And then we can also have some investments.
Economist Dr. Edu Usisako. Now, Face Solutions expects Ghana's fiscal deficit to widen next year due to election spending. This is despite the International Monetary Fund program. Now, according to the UK-based firm, the fiscal deficit will be more than 7% in relation to the size of the economy, suggesting the economic challenges are far from over. Government in the 2024 budget projected a deficit of 5.9% of gross domestic product, about 61.9 billion cedis. Now, Face Solutions says most of the deficit will be financed by increased domestic borrowing, thus crowding out lending to the private sector and posing risks to macroeconomic and banking sector stability. He has also engaged a country risk analyst, Sub-Saharan Africa, at Face Solutions.
So we expect that governments across the region will continue to run wide budget deficits in 2024, and that's despite concerted efforts at fiscal consolidation. In most markets, the primary cause of this will be increased spending on debt servicing, which is expected to remain elevated as a proportion of revenue due to higher global and domestic interest rates. So indeed, while interest payments as a proportion of government revenue averaged 22% in sub-Saharan Africa between 2013 and 2022, we project that this will increase to 41.3% this year and will remain elevated at 38.7% in
Country risk analyst Sub-Saharan Africa at Fitch Solutions, Orson Gad. The city may record a single-digit depreciation against the US dollar in 2024. That's according to the Economist Intelligence Unit. In its 2024 Africa Outlook report, the UK-based firm said only 5 African countries, including Egypt and Nigeria, will experience double-digit depreciation. It, however, said the Central and West African countries that make up the CFA franc zone will experience currency appreciation in 2024. Now, meanwhile, the city lost about 0.41% in value to the dollar last week, taking its year-to-date loss to 12%. Demand by corporates and importers ahead of the Christmas festivity is still high. Let's take you to the currency market this morning and check out the latest form there. So on the retail market, the US dollar going for 12 cedis 18 pesos, the pound going for 14 cedis 95 pesos, and the euro trading at 12 cedis 98 pesos. In other news, the United Nations Development Programme has lauded government's quest to concentrate on meeting some targets of the Sustainable Development Goals in the 2024 budget. According to the UN agency, issues of tax waivers on raw materials for locally produced sanitary pads and the allocation of funds for agriculture and job creation for the youth will help in meeting key targets of the SDGs. Chief Economist for Ghana and the Gambia, Dr. Fatmata Sise, has been speaking to Joy Business at a 2024 post-budget forum by the KPMG and UNDP.
Already, financing has been established here in Ghana of what it takes to achieve the SDGs. And the information is Ghana needs $43 billion every year to be able to achieve the SDGs. That's a huge budget. So regardless of the initiatives, which are of course commendable that we see on the budget for 2024, it means there's a big room for many other stakeholders to play a part in achieving the SDGs. There's the Youth Start program that government is working on. There's a work around MSMEs and actually moving people from the informal sector to the formal sector.
Meanwhile, senior partner at KPMG, Anthony Sapon, believes that the budget will set a good path for businesses if all the policies are implemented to the latter.
Most of the economic indicators really went on a flight. Inflation, exchange rate. And these are not signs that are good for business because businesses need stable macroeconomic environment so they can predict with some reasonable certainty. So this budget being anchored in the theme of pursuing macroeconomic stability and growth, it's really fundamental for our journey into stabilizing the economy.
So you had the senior partner at KPMG, Anthony Sapon, saying that the budget will set a good path for businesses if all policies are implemented to the letter. Now, Managing Director of the Bulk Oil Storage and Transportation Limited, BOST, Edwin Provençal, has called for the introduction of a petroleum reserve levy to fund the creation of petroleum reserve. Now, according to Mr. Provençal, the country will have to be deliberating creating petroleum buffers instead of relying on an inventory which can only last less than a month in the unlikely event of a shortage. He made this call at the 7th Ghana Energy Awards, where he was named Male Energy Personality of the Year.
And today we have some inventory which some people try to call reserves. It will last about 2 to 3 weeks, but we don't pay for reserves. If we want reserves, then we need to elevate the conversation and then make some money available through the levy, move it from 0 to maybe 5 pesos or 10 pesos or 1 cedi so that we can get the money and use it to buy reserves like an insurance for the country, which is paid by the citizens of the country.
You had Edwin Provençal, the Managing Director of BOST.